So welcome back, guys. In this series we are creating a simple EMA strategy. So we are using the indicator exponential moving average for our strategy. And as you can see here on the chart, we are using a simple crossover to make buy or sell trades, but at the same time we are also looking in the higher time frame for one exponential moving average to meet the overall trend. This is like an extra security layer. So as we can see here, we were under the exponential moving average, and therefore we are also looking in this period. It was approximately I think the 27th, something like that. And that will mean in this period we are only looking for sell signals. And as you can see, there were many buy signals as well, but we just want to go in the overall direction of the higher time frame to have better signals. Now we understood what we want to code. Therefore, let's start. First go to data, then new, next, give it a name, and here we go. Now we have our empty expert advisor. As always, first thing we are going to do is to include our library. Here we go. If someone of you don't know what this library is, this is basically a library where I have written a lot of functions for you guys, so you can just use them. There are many reusable functions like opening orders and stuff like that to make coding a bit easier. And in the future, if you write functions for yourself and maybe you want to reuse them in the future, you can add those functions also to your library. So next thing we are going to do is to copy from here our enum time frame. Again, people who haven't watched my last video, this is basically like a predefined variable. And we use that to choose the right time frame in our settings, because normally for a time frame 1 is 1 minute, 15 is 15 minutes, 60 is for example 1 hour, and so on. But to make it a bit more readable in the settings, we have those predefined variables. Okay, here we go. Then first thing we are going to do is to type down the variables we want to give our software. So in this case, we need a fast moving average. Just a quick reminder, extern means we can define the setting afterwards in the settings. Then we need a slow moving average. So just copy this, then let's call it slow, give it the value 100, amazing. Then we need one for our trend direction in the higher time frame. So let's call this one trend and give it the value 200. And the last thing we are going to do is to define a variable which defines the time frame of the overall trend. Okay, here we go. Just a small explanation. So the fast moving average is this one, the slow one is the blue one, and the trend one is this in the higher time frame. For example, here we have H1 and H4. H4 is our trend moving average to define the overall direction. Great, now let's move on with the first function, and that's the get EMA. Okay, let's call the EMA with IMA, open the brackets, and here we go. Then let's use for symbol a variable. We will define this variable afterwards here in the brackets to make this method more reusable. Then this one is called time frame. Next thing is our period, for example 100, 200, something like that. The next shift we can just call it 0. Next thing is the moving average type. So there are, for example, the mode exponential moving average or simple moving average, but we use an exponential moving average. If you're interested in the differences between those moving averages, you can find plenty of articles online. Next thing is the applied price, and the standard is price close. That's the same setting we have as well here. So we can have the moving average method. It's simple, exponential, smoothed, and we can apply it to the close, open, high, and so on. So it's basically the value with which the moving average gets calculated, whether we want to use the close, the open, high, or stuff like that. But we use price close. And last thing is the shift, and we want to type shift. Great. Then let's define the variables here. First thing is string symbol. Next thing is int time frame. Next thing is int period. And the last thing is the shift. It's also an integer. Perfect. Now we can just call this variable with those inputs and get always the correct value back. Great. Then let's write the logic function. Okay, the first thing we want to do is to define the variables we are going to need in this logic. And that's the current value of the exponential moving average and the value before. Why? It's pretty simple. I will show it to you. If we take a look here. To define across, we need to define if there's a difference between the current and the previous exponential moving average. So that means we are looking for example, on a buy signal, we are looking, is the fast moving average above the slow moving average? And one candle before was the opposite the case. And then we have basically defined across. So as I said before, we now need to define the moving averages. First, we need the current one and the one candles before. And why? Again, pretty simple. For example, here, if we want to define a sell cross, we need to make sure that the fast one is under the slower one and before the opposite was the case. And then we have defined a cross. Great. Then let's type double. Let's give it a name. Short-term EMA current. That's great. Okay, here we go. Get EMA. Then let's use the current symbol, the symbol we are in. Then for this EMA, we use the current period where we are using the algorithm. So make sure to don't mix that. If you type period, you get the current time frame. The period is the length of the exponential moving average. Whether you are using an exponential moving average with a period of 200, that means he calculates 200 candles. So this period encoding is something different. This is the time frame. Okay, then next thing is the period. For the short one, that's the fast one, it's this one. Here we go. And the shift. And for the current one, we just want to look back one candle. And why looking back one candle? Because the current exponential moving average is still moving. And we don't want that. We want to place a trade when the candle is closed, because only then the moving averages don't move anymore up and down. So, perfect. That's the current one. Then let's copy this. And let's call this one long-term EMA current. Great. Then we use here this one. And here we go. Now we can copy this again. Then instead of current, we call it previous. And instead of the shift of 1, shift 2. Shift 1 is this candle, shift 2 is this candle. Okay, perfect. Now we need one more moving average, and that's our overall trend moving average. So let's call this trend EMA current. Great. Then let's use this time frame we define in the settings. Then we use this one here and one candle before. That's it. Now let's move on with the actual logic. So one thing we forgot is go back to your OTAs. I'm pretty sure you have this function somewhere, is straight open. Copy this, paste it here. This is basically just checking if we have currently a trade open. So whenever we call this, we check if we have 0 trades open, we give back false. And if we have a trade open, we give back true. Pretty easy. Okay, then let's start with is trade open. If that's equals false, and is new candle. This is also a predefined function by me, so we make sure that we only trigger that every time we have a new candle. If we would not do that, we basically get a signal and then we would open just an infinite amount of orders until we have no margin left. So that's not what we want. We don't want to trigger this signal all the time. And we prevent that with is trade open. That means we can only open one trade. And with is new candle, we make sure that only when a new candle arrives, we check for the logic. Okay, great. Now first let's check for a bullish cross. Okay, if the short term of the previous candle was smaller than the long term of the previous candle, okay, short term has to be smaller than the long term, great. And current short term should then be greater than the long term. That means, in this case, we had the short term smaller, that's this part, and then the current one is bigger. Perfect. And then there's one more thing. We need to check if the current price is above our trend moving average, because, as I said, this is a second layer of security. We check the overall trend. Okay, perfect. Now let's do something. And what we want to do is pretty simple. We want to open now a buy position. So let's type set buy, then open the brackets. So this is a predefined function of me. You can find it in our library. It's much easier to open trades with this function. First thing is we have to use the risk setting. And if you can't remember what's the correct risk setting, just go to the definition and check. Setting 1 is the amount of money, 3%, and 3 is fixed lot. We want to open a fixed lot now. So it's risk setting 3. We want to open one lot with 10 pips stop loss and with 10 pips take profit. Here we go. Now this is our buy function. Now let's copy it, paste it in here. And now we basically have just to do the opposite. Here we go. And now we want to open a sell. Perfect. One more thing, trigger the logic in the on tick, and then we are ready to go. Now let's click on Control, comma to align everything. Click on compile and hope for no errors. Amazing, no errors. Perfect. Now let's test it out. So first thing we are going to do is to choose our expert advisor. Euro USD fine, every tick fine. From 1st of June, wishful mode, amazing. H1, spread 2, great. Let's go with a fast moving average of 10, a slow of 40. The trend is in the H4 and an exponential moving of 100. And then what we are going to do now is to set up our tester template, period 40 and exponential. Here we go, this one is 10 and exponential. And now we make right click, then we click on template, save template, and now we save this as tester template. If you don't have one yet, you can just type down tester and click on save. In my case, I have to replace it. And now every time we click on start test, we will see those two averages. And here again also exponential. Okay, now let's get started. Okay, we could see our first trade and second trade. Here we go. Okay, this one. As we can see, we look to the previous candle. There we had a closed cross. Here was no cross, and here was the cross, exactly in the middle. After this closing, we opened the trade, perfect. And it was a profit. Then just check for the other exponential moving average. So it's the 2nd of June. We have to look here, 2nd of June, amazing. We have been under the overall trend EMA. Then let's check it here. Okay, no cross in the middle of those two, amazing, because we check 2 candles previously and 1 candle before, and if there's a cross detected, we open this trade, amazing, sell trade, and it went into take profit. 6th of June, let's check here, 6th of June, we're still in the sell direction, amazing, looks great so far. Then let's move on, and we had another trade. We had a sell trade here again, and yeah, it looks like a sell trade. Let's make this a little bit smaller. Yeah, we can see we had here a sell cross, and here we go with this candle then closed low enough to trigger a sell cross. Yeah, that's right. And then we had here our sell trade. It was the 8th of June. 8th of June, which hour? It was 1 o'clock, 1 a.m. and yeah, 1 a.m. we were still in the sell direction. And as you can see, this ranging period, we could nearly filter it out with our overall trend direction. It was just like if the signal would have been triggered like 2 hours later, 3 hours later, it would have been filtered by the overall EMA, but you can never filter every bad trade. So here we go. Let's move on. Let's see if we can get a buy trade. Again, a sell trade on the 12th of June. Yeah, we have been above the moving average. So this was correct, this sell trade here. Here we go. We had our first buy cross. Yeah, here we had the cross. With this one, the candle closed, and here we go. Again, the reason why we triggered a trade here and not while the cross is happening, that's because this moving averages are fluctuating while this candle is open. So that means if this candle would have closed bearish, this moving averages wouldn't have made a cross, since they are moving while the candle is moving. Only when the candle is closed we have a fixed cross. Okay, amazing. It was the 12th, and here we go. On the 12th we started to go into the upper part. That's correct. Let's check it exactly. 12 o'clock, and here we go. 12 o'clock we have been above the overall trend EMA, and it was a take profit. Amazing. The software is working. I will now just test it without the wishbone mode to see how it's going. As we can see, not that great, but yeah, let's test some other settings. Then let's try something different. Let's go with 30, 50, sorry, 50, and also 50. Let's go, click on test, and let's see. Doesn't look that bad. Great, amazing. So if we go here, we can see a very bad modeling quality. I will explain you in our next tutorial how you can get data for testing. And yeah, we can see already slightly profitable. Amazing. There's one more thing I want to show you, and that's how you can optimize. You click on here, and then you can check those boxes, for example. Then you can give it a start value and the end value. So we will start with 10, we increment it by 10, and we go until 30. Here we go from 30 to 90, and here from 50 to 150. Okay, amazing. And now if we click on OK, we can click on optimization, and then it would run through all the different variations. We can go to results, and then we can see here with this setting we get this result, with this setting we get this result, and so on. So that's basically how you optimize it. But keep in mind, don't over optimize something. because you can basically write something and then tweak the setting to a perfectly way, and then your EA would perform amazing. But if you slightly change something, it would destroy the performance, and that is not what you want. You want to have a software which is most likely adapting itself, the variables. So for example, the moving average is not a static 20, it's always changing. And another good thing is when you can move the variables. That means it's not exactly only this position, then the EA will work, and if you change it a little bit, it's completely bullshit. So that's not what you want. You want that you can change the variables also a little bit and it's still performing well. This is to ensure that we are not over-optimizing, to run thousands of tests to find one little tiny setting which is working great, because that's just over-optimizing. That means you change the variable in the exact way to perform in the past, but the future is different. It's a little bit the same, but you can never predict it, so it's never the exact same. Therefore, this is just a tip from my side. Don't over-optimize, but it's a pretty important tool and you will need it in the future. So yeah, that's it from that episode. I hope you enjoyed it, and let's see. The next one is where I explain you how you can make good quality tests. Thank you for watching, guys, and I will see you in the next one.